Bitcoin's about to cross $100,000, and that is going to change the world. Let me explain. Bitcoin is a digital currency that's decentralized, owned by nobody. Started in 2009, and all of a sudden it went from zero, and it's about to cross that $100,000 price point. Why is that important? Well, first, it's a round number, and humans like round numbers, and so it's going to get a lot of attention. People can't comprehend the fact that a digital currency could be worth so many dollars. But more importantly than that, $100,000 signals the fact that Bitcoin is not going anywhere. And so when it was smaller, a lot of large capital pools, big institutions, financial organizations, countries, sovereign wealth funds, etc., they saw Bitcoin, people would tell them to buy it. And they always would say the same thing. It's too risky and it's too small. I have a lot of money. If I want to make money, I got to put a lot of money to work. But when Bitcoin started to get larger, it became less risky. It's the only asset I know in finance. The larger that the price point is, the less risky it becomes. And now all of these big capital pools can start to allocate. So why did I say that the world is going to change? Well, Bitcoin is a reflexive asset. This idea of reflexivity is incredibly important. It means that as the price goes higher, more capital will pour in, which will push the price higher. The fact that it is a reflexive asset means that it can accelerate at a very quick speed. Let's go back to 2020 and I'll show you what I mean. Bitcoin was trading around $10,000 in September of 2020. By March of 2021, about 6 months later, all of a sudden, Bitcoin was then trading at $64,000. That's more than 600% increase in a short period of time. Why does that happen? Because when Bitcoin moves, the world pays attention. As it gets more attention, the news is talking about it. People are, from a word of mouth standpoint, are telling their friends, more capital pours in. It's a finite asset. And so that finite asset has to go up in price in order to accommodate everyone. It's not like a stock. A stock that sees a lot more demand and starts trading higher, the company usually will issue more shares. They'll try to satisfy the demand and raise capital. No one can create more Bitcoin. And so a finite supply with more demand means the price has to go up. That's just economics 101. Now, here's what's most interesting to me. Bitcoin already has had a terrific run over the last year. It's up 160%. Bitcoin is up 130% year to date. Compare the last year of Bitcoin at 160% to the S&P 500. It's only up 30%. Bitcoin has destroyed the S&P and the stock market. But it doesn't feel like Bitcoin is at all-time highs. If you go and you look at Google search trends, they're up, but they're not up as much as they were in past bull markets. If you go and you look at the news, they're talking about Bitcoin, but it isn't every single story like it has been in past bull markets. And so I believe that we still have a long way to go in this bull market, which means that when Bitcoin crosses this $100,000 threshold, the world is going to take notice. It is such an absurd number for a digital currency that you can't ignore it anymore. There's going to be financial advisors, large financial institutions, very big sovereign wealth funds, and countries that all say, now I need to start doing this. On top of that, we have MicroStrategy, which just raised another $3 billion that they're going to start buying Bitcoin as well. They're literally buying it right now, and I think they're one of the contributors that's pushing the Bitcoin price higher. And so anytime that you see an asset like Bitcoin going up this much, it always begs the question from the critics, well, what is the actual use case of Bitcoin? That is where I think the Bitcoin community has done a poor job of communicating. We try to sit and defend Bitcoin as if it needs to be the next global reserve currency or it needs to be used to buy a coffee in a coffee store. But instead, holding Bitcoin is the use case. There are 8+ billion people in the world that have their currency devalued thanks to their governments and their central banks. They have no way to protect their purchasing power unless they're going to go and spend enormous amounts of money, get mortgages and bank approvals to buy real estate. Or maybe they have to go and sign up for brokerage accounts and get approvals to buy stocks. But instead, Bitcoin, it simply says, regardless of who you are, as long as you have an internet connection, you are allowed to buy this asset. You can store your economic value in it, and it will protect you. It will protect you from the central banks devaluing your currency. It will protect you from losing your purchasing power. That idea was first embraced by individuals. Then we saw corporations and financial institutions, and now we are knocking on the door of countries. But everyone has the exact same problem. The fiat currencies in the world are going to be devalued. How do I know? The United States just crossed over $36 trillion national debt. We are adding about $10 billion per day. If you look at the last 3 months, we've added almost $900 billion to the national debt. These numbers are bonkers, and there is no slowing down in the future. Instead, the national debt continues to grow to the sky, and Bitcoin goes up at the same time. Bitcoin is calling the bluff of the politicians. It's telling us that the national debt is going up. They're going to have to devalue your currency, and more people want Bitcoin.
Welcome to DRJ Crypto News Update. Welcome to episode 56. Subscribe now. Bitcoin prices surged close to $100,000, driven by optimism surrounding President-elect Donald Trump's potential crypto-friendly policies. The cryptocurrency peaked at $99,073, reflecting a 60% increase since the election on November 5th. Investors anticipate regulatory relief as Trump promises to create a crypto capital in the US and establish a Bitcoin reserve. This surge follows significant inflows into spot Bitcoin ETFs and a shift in market sentiment towards cryptocurrencies post-election. Here's an in-depth analysis of what might contribute to such a surge and its broader implications. One, drivers of Bitcoin's price surge: political optimism. Pro-crypto policies, promises of reduced regulation, establishment of a Bitcoin reserve, or tax incentives for cryptocurrency adoption, regulatory clarity, anticipation of a clear and supportive regulatory framework reduces uncertainty, encouraging both retail and institutional investments. Spot Bitcoin ETFs. Approval of spot Bitcoin ETFs provides a major avenue for institutional investors to access Bitcoin, driving demand and increasing prices. Hedge against inflation. As inflation concerns persist, Bitcoin's narrative as digital gold strengthens, attracting more capital. Corporate adoption. Companies integrating Bitcoin into their balance sheets or payment systems amplify its utility and demand. Global trends. Growing adoption in emerging markets and among fintech companies contributes to global liquidity and demand. Fixed supply. Bitcoin's capped supply of 21 million coins means that as demand increases, prices must rise to balance the market. Halving effect. With Bitcoin's next halving expected in 2024, reduced mining rewards are likely already creating bullish sentiment, further driving up prices. Weakening dollar. If the US dollar weakens under inflationary pressures or global monetary policy shifts, Bitcoin could become a preferred alternative. Heavy checkmark hash reaching $100,000 would represent a psychological barrier and milestone, likely triggering media attention and new retail investors. A heavy checkmark hash at $100,000, Bitcoin's market cap would exceed $1.9 trillion, potentially making it comparable to gold in terms of its appeal as a store of value. Heavy checkmark hash. A Bitcoin rally often pulls the broader cryptocurrency market upward, potentially boosting Ethereum and other major altcoins. A sudden surge could provoke stricter regulations if policymakers believe the market is overheating or presents systemic risks. The central banks might accelerate the development of CBDCs to counter Bitcoin's influence. Rapid price increases often lead to corrections as early investors take profits, potentially destabilizing the market. Bitcoin's rise to $100,000 cements its role as a major asset class, encouraging more institutions to integrate it into their portfolios. Regulatory clarity paired with such growth could lead to its inclusion in retirement funds and sovereign wealth portfolios. The milestone could bring Bitcoin closer to mainstream acceptance with increased participation from average investors and businesses. Sustainability. Bitcoin's ability to hold above $100,000 will depend on sustained demand, broader adoption, and regulatory developments. Broader market trends. Future rallies may depend on technological advancements in Bitcoin's scalability and use cases. Tell me what you think of today's update. Thank you very much. See you on the next video.